While investors are chasing trillion-dollar AI companies, something strange is happening deeper inside the AI infrastructure stack. Two companies connected to the technology powering modern AI systems are trading at roughly $2 and $5 per share. But here's the catch. They're not building AI apps. They're building the semiconductor and visual processing technologies that help AI devices communicate and analyze the world around them. And historically, some of the biggest market inefficiencies appear exactly in these deeper infrastructure layers. So the real question becomes, if AI systems continue expanding across industries, could the companies enabling those systems eventually attract more attention? Let's break down how these two companies fit into the AI ecosystem. Artificial intelligence isn't just about algorithms anymore. Behind every AI model is a massive physical infrastructure network: data centers, semiconductor chips, high-speed connectivity, sensors, and visual processing systems. Without those layers, AI systems simply cannot function at scale. But here's something most investors miss. Markets often focus first on the companies that are most visible, the ones building applications, software platforms, and AI tools. Meanwhile, the deeper infrastructure layers often take longer for the market to fully recognize, and this is exactly where pricing inefficiencies usually exist. Institutional investors often monitor these infrastructure layers quietly because if AI adoption continues expanding, the companies enabling those systems could become increasingly important. Now, this doesn't guarantee anything, but it helps explain why smaller companies sitting inside critical technology layers sometimes attract attention later in the cycle. And this is exactly where smaller cap opportunities tend to form. The first company operates inside one of the most overlooked areas of the AI ecosystem: connectivity. As AI systems expand into factories, vehicles, smart cities, and industrial environments, machines increasingly need to communicate with each other in real time. But here's the catch. Reliable wireless communication between devices requires specialized semiconductor technology designed for low-power, long-range data transmission. And this is the part most people miss. AI systems don't just live inside data centers. Increasingly, they exist across millions of connected devices, sensors, industrial equipment, smart infrastructure. And if this network continues expanding, companies enabling these communication layers could become increasingly important. But unlike the software companies building AI applications, these infrastructure providers often receive far less attention. And interestingly, another company later in this video approaches the AI ecosystem from a completely different angle: visual processing. But first, let's continue exploring this connectivity layer. As artificial intelligence moves toward edge computing, more processing happens closer to where data is generated. That means devices, sensors, machines, cameras, vehicles must communicate efficiently without relying entirely on centralized data centers. If this edge AI infrastructure continues expanding, communication semiconductor providers become essential pieces of the system. If AI systems operate across millions of connected devices, companies enabling those communication networks become critical. This is why connectivity technology is quietly becoming a major piece of the broader AI infrastructure stack. Now here's something interesting about the stock itself. Over the past few years, shares of this company have experienced significant volatility. At one point, the stock traded above $10 per share before pulling back during the broader technology sector downturn. Today, it sits around $2 per share, dramatically lower than previous highs. Now the question becomes, if AI-driven connectivity demand expands in the coming years, could companies operating in this layer eventually see renewed interest? That's still uncertain, but the price movement shows how quickly sentiment can shift in smaller technology companies. The company focuses on designing semiconductor solutions for IoT connectivity, enabling devices to transmit data efficiently across cellular networks. These types of chips support industries like smart infrastructure, industrial automation, and connected systems. And as machine-to-machine communication grows, technologies like these play an increasingly important role. But this is where things shift. When you actually look at the company behind this connectivity technology, it turns out to be Sequans Communications SA, trading on the NYSE under the ticker SQNL, with a current stock price around $2.57 per share. Now, of course, the market hasn't necessarily priced in a massive opportunity here. Smaller semiconductor companies often face challenges like competition, revenue fluctuations, and adoption timing. This doesn't mean the stock moves tomorrow. There are real risks here, and timing is always a major factor. But it illustrates how some companies sitting inside the AI infrastructure stack can trade at relatively low prices while operating in important technology layers. Now, before we get into the second company, here's something most people completely overlook. Even though AI demand is exploding globally, some infrastructure providers inside the ecosystem are still experiencing delayed price reactions compared with the company's dominating headlines. And this is where things get interesting, because the next company operates in a completely different layer of the AI technology stack, visual processing. But unlike the first company, which focuses on communication between machines, this next company focuses on something equally critical for artificial intelligence: vision. AI systems increasingly rely on visual data processing, cameras, displays, and advanced image processing technologies. From gaming devices and smartphones to automotive displays and industrial systems, visual processing hardware is becoming a key component of modern AI applications. And this is where things start getting interesting. The company develops semiconductor and software technologies designed to improve video processing, image quality, and display performance. These types of technologies are used in areas such as consumer electronics, visual computing, gaming hardware, advanced display systems, and as AI systems increasingly analyze visual data, these types of processing layers become more important. If AI adoption continues expanding across devices that rely on visual data, including smart displays, augmented reality systems, and intelligent cameras, companies operating in visual processing layers could see increased demand. But here's the catch. This layer of the market often receives far less attention compared to the companies designing AI models themselves. And the stock itself has also experienced major volatility. Several years ago, shares traded significantly higher before declining during the broader semiconductor slowdown. Today, the stock sits around $5 per share, far below some previous levels. So once again, the question becomes, could renewed interest in AI-related hardware eventually bring attention back to companies operating in this layer? And this is where it gets interesting. The company behind this visual processing technology is Pixelworks Inc., trading on the NASDAQ under the ticker PXLW, with a current price around $5.44 per share. But again, none of this guarantees future performance. Smaller semiconductor companies face competitive pressures and technology cycles that can take years to play out. There are real risks here, and timing remains one of the biggest uncertainties. So when comparing these two companies, they represent different pieces of the broader AI ecosystem. One focuses on connectivity infrastructure, enabling machines to communicate across networks. The other focuses on visual processing, improving how devices process and display image data. Both operate in technology layers that are essential to modern AI systems. But the way those opportunities develop could look very different. If connected devices continue expanding across industries, communication infrastructure providers could benefit earlier. If visual computing becomes a larger focus in areas like augmented reality, gaming hardware, and advanced displays, Visual processing companies could see stronger adoption. And this creates an interesting question for investors. Which layer of the AI ecosystem expands faster? Connectivity or visual computing? Zooming out, what makes both of these companies interesting isn't necessarily their current stock price. It's the layer of the technology stack they operate in. Artificial intelligence is built on multiple layers: hardware, connectivity, processing, and applications. And historically, the deeper infrastructure layers often move later in the cycle. But when they do, the price reactions can sometimes be more aggressive. That's why institutional investors often monitor these types of infrastructure providers quietly, while the market focuses on more visible companies. If you're interested in exploring more overlooked companies connected to the AI infrastructure ecosystem, consider subscribing for future breakdowns. And as always, remember that this discussion is for educational purposes only and not financial advice.